Good morning, Rainmakers. Priyan here from Reignway Realty. Hope you're well. Your trusted expert in the Dubai property market. Today, we're venturing into a topic set to revolutionize the way we invest in real estate, tokenization. As the world rapidly embraces digital innovations, Dubai is at the forefront, breaking traditional barriers and opening up exciting new opportunities through fractional ownership with blockchain technology. So let's dive in and explore how these trends are transforming our markets as we speak. So, understanding tokenization. Tokenization is simply a process of converting the real world tokens on a property. Well, sorry, let me rephrase that. It's converting real world assets like property into digital tokens on the blockchain. This means that instead of buying a property outright with mortgages or cash, an investor can basically purchase fractions of it, making higher assets accessible to them. So, for example, it's like you've got the whole cake, and rather than buying the whole cake, you're just buying a small slice of it. Now, the cake may cost, for example, £10, which you could afford to most probably buy outright if you wanted to. But of course, if the cake cost £1 million, then you aren't eligible to purchase that because you most probably don't have £1 million cash hanging around or even be able to afford a mortgage in some circumstances. But it does put leverage and more pressure on you as a whole. So, this innovative approach is not just a trend, it's really reshaping how we think about property investment because it's a game changer for the whole market, i.e., just like Bitcoin. It means that the small guy at the bottom, whether he has money or not, or whether he went to private school or has connections, is able to participate in the opportunity of purchasing a property in certain sectors and certain sizes that he would never be able to afford before. So the benefits of fractionalization and ownership and blockchain, let's break them down and why it matters. So number one, as I mentioned, low barriers to entry. Fractional ownership means that you can invest in the top tier properties with a small amount of money. Additionally, liquidity. So, what do I mean by liquidity? Tokenized assets can be traded on the secondary market. So, initially, what happens is that, say, a property is worth a million, you have a million tokens, those million tokens are sold at $1 a piece. You can buy 5, 10, 20, or even the whole million if you wanted to. It wouldn't be advisable, but that's up to you. And then what happens is after that gets done, it gets put into a secondary market. So then that makes it easier to buy and sell the token without having to wait until the project is finished. Now, how does that work? Well, the way it works is like a normal market. The information will come on from the product that's being developed, or what information and value of the product is. So, for example, if we're doing a development, the property was bought for a million, 250 is being spent over it over a 6-month period. The market may be going up as well, a certain percentage. And at the end of the 6 months, say it takes 3 months to sell, it sells for 1.5 million. So therefore, after the profit, there may be £250,000 profit. So during that period of when it's getting built, the value of the property is going up, and therefore somebody may say, I'd wish to sell my token at a profit of 10%, and the other person thinks, yes, there's actually a bit of margin in there for me because I believe that once it's ready and sold, it will make 25%. So the person liquidates early and takes his 10%, and the other person then has an uplift of 15 if it happens. Now, of course, it goes down, then the person will lose out and the other person will gain. But because it's based on a real asset and a real product, it's not going to fluctuate up and down just like Bitcoin, just due to market sentiment or what somebody says in the world. because at the end of the day, the property market is more stable in terms of the way it moves. It will either move in a positive direction or even negative direction, but it's not just going to go up and down significantly overnight. So as long as there's somebody willing to buy the token at a later date, there'll always be somebody willing to sell it, maybe. But otherwise, if nobody sells it, of course, then the property price, the token will go up, and the token will go up to a price where eventually somebody is willing to sell it. So therefore, then that's how the market will carry on doing. Now, the other thing that's beneficial about fractional ownership and tokenization is the transparency and security. So thanks to the blockchain technology, every transaction is recorded on an immutable ledger. That enhances trust, reduces fraud, and streamlines the process. Now, you may say, what's an immutable ledger? With blockchain technology, if nobody is aware, look it up. It's very easy. What it is it is a mathematical formula, and once somebody buys a token here, and then another person buys a token there, and another person buys a token there, and it carries on, it has to be verified through the chain. So therefore, in order for fraud to happen, it's not like me just speaking to the bank and trying to get somebody to do something that's not correct, and I could be paid off in order to try and create some fraud. All the people within the chain have to be paid off. And so therefore, that's impossible to do. You don't know where they are. You don't know who they are. You can't contact them by telephone number. So as a result of that, it's all security in terms of names and numbers, but the ledgers are there in terms of who owns what. And therefore, it has to be verified by everybody. So it's the strongest kind of security that you can get. And that is the beauty of blockchain in terms of it's unbreakable and cannot set up fraud. Now, you'll say to me, well, but people have lost money in Bitcoin. And yes, there has been a lot of fraud. And the way that happens basically is the fact that if you have the Bitcoin in an exchange, therefore, and then you take it out of the exchange, then the issue is that because the exchange were holding it on their platform, that's like, for example, having gold in your hand and you're walking around and somebody robs you. But if you have it in the safe and it's non-accessible, then nobody can sell those Bitcoins without your permission. You have to have the physical Bitcoin with you. I'll go into that in a much more detail another time, but that's another story with regards to Bitcoin. So diversification as well with tokenization means that investors can also diversify in different portfolios. So, for example, say in Dubai, you can invest in the marina, you can invest in downtown Dubai, you can also invest in Jumeirah Golf Estate, and maybe also do off-plan as well. So, because of the fact that gives you more diversity, you are able to spread your money and get much more balanced portfolio, with also looking at more uptrends of speculating in different areas. So rather than having to think, oh, I want to invest my money in a stable market like Marina or downtown Dubai, now I've used all my money. You can use some of your money for that, and then use some of your money for more speculative areas which you think are going to go up in the future, like Dubai South, and therefore then your money will work harder for you, and then you'll have a more balanced portfolio. So the regulatory landscape in Dubai is something that makes it amazing for tokenization to happen here, because Dubai's regulators are paving the way for this digital transformation. Recent initiatives have focused on creating supportive frameworks for blockchain and tokenization assets. The goal really is to ensure investors are protected while promoting innovation. Although navigating this involves regulating the environment, it might seem challenging, but exactly at the same time, there's a balance between innovation and security that Dubai sort of sets itself apart as a world leader in real estate, and is really trying to work out how to move forward on this. You can actually buy property in Dubai using cryptocurrency, so that shows you where they are already. But we'll discuss a bit more about the regulative side of the tokenization in another episode, because that is something that is quite fascinating and worth talking about in terms of Dubai and its initiative. Future trends on how and how to leverage them. As we look ahead, the potential for tokenized real estate in Dubai is immense because number one, you're going to have a broader investor access. So expect more platforms to emerge offering digital tokens from various property types, improved market efficiency with the faster transactions and lower costs. That means that the entire real estate market could become more dynamic. You don't have to wait for properties to be built in order to sell off plan. You don't have to wait until a property development is happening. You don't have to wait for the money to prepare the property in order to rent it because it's already rented, and you can just buy into a ready-made tokenized product to give you a yield. So the market's going to be much more efficient and much more liquid. The global investment opportunities are fantastic as well because blockchain removes all the geographical barriers, opening up Dubai's market to investors from all around the world. So that's pretty amazing because if you think about it, people in America, Australia, who are thinking about Dubai, they realize that these countries are not going to create the returns that they want. And then they're able to liquidate from their countries and then earn income or capital growth in another country, completely controlled and monetized through blockchain and tokenization with the regulations, but also knowing that if they wanted to, they could move to Dubai, and Dubai being tax-free. I presume if they set up a company in Dubai, then they could get the funds coming into Dubai and only pay 9% corporation tax if they put it in the company as opposed to their own name. There is also the possibility of getting golden visas depending on how much you invest. And the tokenization does cover the golden visa scenario, which I said we'll discuss with you later as well. So in conclusion, to wrap up, tokenization is ushering into a new era of Dubai's real estate, a making of high value investments accessible to everybody, boosting liquidity, and also enhancing transparency. How is this done? Mainly through the blockchain technology using tokenization as a product. I mean, if you're excited about this as I am, about these developments, I'd encourage you to stay tuned for future episodes where I will dive into more examples of how this is working in real life. I am trying to look at setting up a tokenization platform myself for Reignway makers to invest in. So if you enjoy the podcast, please leave your comments and share your thoughts on how tokenization might impact your investment strategy. But I'm Priyan. Thank you very much for joining on our journey in the Dubai property market today. And hopefully keep innovating and investing smartly. I will see you soon.